Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm thrilled to welcome Ed Steer to the program, a precious metals expert who has been analyzing the space for over 20 years. He is a former contributor to Casey Research and the founder of Ed Steer's Gold and Silver Digest. We are going deep on both the silver and gold sectors today, as Ed provides his latest take on the bullion banks manipulating both metals and why once price suppression ends and the shorts are forced to cover, gold could rise to over $10,000 with silver in the triple digits. We're going to discuss why representatives from China have been flying around the world buying up silver concentrate directly from miners. Is this a clear sign that China recognizes the true value of the metal, and what is their ultimate end game? We're going to explore why Ed thinks the fiat currency system is on its last legs, and you're going to want to stick around to the end, where Ed dives into why his grandfather gave him the greatest advice perhaps ever given to a grandchild: never trust the banks. All of this and so much more, so strap yourselves in for my conversation with Ed Steer. Ed Steer, great to have you back on Commodity Culture. Last time we spoke was at the beginning of June this year. Silver was around $35 at the time. We've since seen a breakout to nearly $40 before it pulled back and is now sitting around $38, 37 and change, close to 38. A lot of people expected silver to break out after that 40 and get to that $40 mark and beyond. I'm wondering what your thoughts are on that expectation that a lot of people had, and what you make of the recent price action in the silver market.
Well, a lot of people are expecting that, including myself. But what happened is, as you pointed out, silver went from 35, and it got as high as $39 an ounce. But the commercial traders decided that's as high as they're going to let it go for the time being, so they capped it at $39, and we've sort of been a slight downtrend since. And of course, we got smacked pretty good yesterday, which was Tuesday. We've recovered a bunch today. So, everybody expects it to break above 40. I'm expecting it to break above 40. And the only reason it's not is because it's always the case. The 4 and 8 large commercial traders have been sitting on the price for the last 50 or 60 years or whatever. And we're seeing they're allowing the price to rise slowly. And one of these days, probably this fall sometime, we're going to see silver break above 40. And once we get above 40, then things are really going to start to get interesting. But, we have to get through the summer doldrums. As we talked about on the air before we started recording this, is that, the volumes in the COMEX futures market are basically fumes and vapors. The shares, there's not much volume in them. Everybody's on vacation. This has been like this now for the last couple of weeks, and I expect this to continue right up until we get past the September long weekend, or at least until we get past the Jackson Hole meeting this Friday. So, it's summertime, and anybody that has an agenda, like they did yesterday, can come in and either run the price up or smack it lower. And there was very little volume yesterday, and so it's summertime. So I'm not expecting anything until, like I said, until next week or until we get into the fall.
Yeah, and you mentioned that there was interesting activity bubbling beneath the surface when we did converse before hitting record as well in the Commitment of Traders report. Could you walk us through that?
Yeah, if you look at the price, normally what happens is if the boys are going to come in and try to cover short positions, they drive the price into the dirt. But we haven't seen that really, and since the beginning of July, which is like 6 weeks ago, 7 weeks ago now, the big 4 and the big 8 shorts have covered 14,000 of the short positions. And if you look at the chart, there's no sign of it anywhere that they've beaten the price down. They've been doing it quietly and under the radar. The only time you'd notice it is when you look at the actual numbers. You'd never know it by looking at the price. So they've been reducing their short positions like mad and very quietly, and not just in silver, but also in gold. It's much, much more pronounced in silver. And they've covered, like I said, 14,000 contracts, which is 70 million ounces. They managed to cover, and there's no sign of it in the price whatsoever. And I'm expecting this Friday's Commitment to Traders report to show another big drop. So quietly and under the hood, the 4 and 8 largest traders, the ones that are actually controlling the prices in silver and in gold, are heading for the exits.
Well, I wanted to discuss the possibility of triple-digit silver with you here because everybody's talking about $50. We need to get back to previous all-time highs. If we return to 1980 all-time highs, we're looking at $200, just under $200 silver. And even if we're using if people will say, well, that wasn't an organic spike, it was due to the Hunt Brothers silver squeeze. Well, we could go to 2011. It's still over $100. Is this a realistic proposition in your view? Because there's a lot of talk that the powers that be certainly don't want to let silver get to those levels. Number one, obviously, because it then shows the weakness in fiat currency and kind of shows silver's role as money, which they don't want. And the other is for the industrial uses of it. It would then be much more expensive for manufacturing, particularly military purposes, which some people who've gone down that rabbit hole say that's one of the main reasons they want to control the price. So I'm wondering what your thoughts are there on those forces trying to stop silver from getting to that level, and if you think ultimately they will be successful or not.
Well, I have one of Keith Neumeier's triple-digit silver T-shirts. I don't have it on today, but it's in my closet. Okay. And there's no question about it. Silver should be some rather fantastic 3-digit number right now as far as price is concerned, because they've been sitting on this thing like forever. And all you have to do is look at, the supply-demand fundamentals. We're now, according to the Silver Institute, in the 5th year where demand has exceeded supply by 100 or 200 million ounces. I mean, this can't go on forever. And, they're not trying to protect the price, they're because it becomes too expensive, because for the military, whoever the heck is, using this stuff, for most purposes, the amount of silver in any product is a minuscule amount. And so whether the price is $38 like it is today or $380 isn't going to make a lot of difference to their product. The only reason that we're sitting at the price we are at today is because, as I said to your previous question, is that the large commercial traders, which are mostly bullion banks, have been sitting on this price, the price of it, for the last 3 or 4 generations. So, like I said, they're covering the short positions, and the supply-demand fundamentals dictate that at some point we're going to run into a situation where the physical supply doesn't exist, and then we're going to see far higher prices. Silver analyst Ted Butler wrote a piece about that called "The Bonfire of the Silver Shorts," and these big run-ups in silver that we saw back in 2011 and back in 1980, I've lived through both of those. We're basically short covering rallies where the shorts were running to cover their short positions and driving the price higher. Well, this time when silver goes and we do run into a problem, we're going to see a 3-digit silver price is going to be rather shocking. So it's just a matter of when it happens, not if it happens. And they've been keeping on the lid on this thing for a couple of generations. And but one of these days it'll break. Once it breaks above 40, I think then you'll see it really start to move, because I think some of the short holders are sitting on horrendous losses, and they're going to be forced to cover. And once we break through 40, I think it won't be long before we break through 50. And once we break through that, then the sky's the limit.
And now a quick break to hear from our sponsor, ARC Silver Gold Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1-ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. Yeah, and I think that run from 35 to nearly $40, it got to I think 39.40 or somewhere around there before correcting a little bit. It's still hovering around 38. I think that's actually a very promising development. I think one of the issues is we live in a world of social media noise, and so people expect instantaneous results. Like, okay, it's headed to 40, it's going to go to 50, and then when it doesn't, they're ultimately disappointed, and then they come to my comment section and complain about it. So I do want to bring one thing to your attention that I came across on X. I'm not sure if it's legitimate or not. There was an account called My Precious Silver, and they posted that the SLV ETF added over 10 million shares a couple of days ago, a fact they claim means 285 metric tons less free float in LBMA vaults. Now, as I mentioned, social media is so full of noise. People are throwing around things. Sometimes they're not as significant as they're made out to be. Do you have any insight into this and any thoughts you could give us overall on current LBMA silver inventory levels?
Oh, sure. I mean, that 10 million ounces is probably right on the money. And the reason I say that is very simple. I think it was on Monday, SLV added 9.1 million troy ounces of silver to their stash, which, roughly translates into 10 million shares. So, that is absolutely true. I mean, it was the headline to my column on Tuesday, or was it Saturday? I can't remember what day it was, but it's happened within the last 3 or 4 days that 9.1 million ounces of silver was added to SLV. And when you add that silver to SLV, you have to generate the shares to back that up. And so that is absolutely correct. And whether it be 9.1 million shares or 10 million or whatever, it's a lot of silver, 285 as this gentleman reported. And, that's not exactly chopped liver. I mean, that's a lot of silver. Everybody's watching the float in London. London is such an opaque market that, they don't tell you anything more than they absolutely have to. And, that 10 million shares, 10 million ounces, went from the free float into SLV. And of course, there's other ETFs out there besides SLV. And so, the amount of silver in the float out there is getting smaller and smaller all the time. And once we have silver above $40, when you're going to see the amount of silver pour into these ETFs just absolutely skyrocket. So, it's a very delicate balancing act for the silver inventories in the LBMA. And sooner or later, they're just going to flat run out. And everybody's looking around for the signs of that to happen. And that 9.1 million ounces that just got added, I mean, what was that all about? My guess is it was added. It was added on Monday. Now that I think about it, that was probably added to cover an existing short position in SLV, because the short position in SLV right now is, let me see, in the last short report, it was 45.22 million shares / troy ounces. That is a horrendous amount. It's like 8.5. It's 8.5% of the entire float of SLV shares is held short. And that short position, a short position is an open position that has to be covered. And those who are short, most likely some of the big bullion banks, sooner or later have to cover, either by buying the shares or depositing the physical metal. And that physical metal at 9.1 million ounces is probably added to SLV to cover a short position. And it won't be in the next short report that comes out next Tuesday, because it was deposited. It was deposited on the 18th, which is a Monday, and the cutoff for the next report was last Friday. So it was conveniently added, so we won't see the results in next Tuesday's short report in SLV. So there's, between that and the covering in the big four and the big eight and this big addition to SLV. And the huge short position in SLV, like I said, there's all kinds of intrigue going on. Where if you don't know where to look, there's big activity going on.
Do you have any concerns about the authenticity of the numbers reported by the SLV ETF? I know there was concern raised. It must have been 1 or 2 years ago that the SLV changed its prospectus and changed the language in it, something to the effect of that they might not exactly have all of the exact ounces to back the amount of shares that they've issued, which is why there was a big push for you should invest in PSLV instead, the Sprott product, because all of that is 100% authenticated. What are your thoughts there?
I wasn't aware of those changes in SLV, so you're talking to the wrong person. I'd be very surprised if SLV doesn't have the silver they say they're going to have. But having said that, I am not a fan of SLV at all. When you mention BlackRock and JP Morgan in the same sentence, I run screaming. I run screaming, okay, and so should everybody else. I own PSLV for exactly that reason, and I've owned PSLV since the outset. I've had it for as long as Eric came up with the fund. So, I just don't like SLV or GLD for those reasons, because they're controlled by the big banks, and I just don't trust them. So, um, that's not investment advice, but that's where I stand on the issue.
Yeah, that makes a lot of sense. Another thing I wanted to talk about was reports that I've heard from several guests on this show. I've seen it come up on social media as well, that representatives from China are buying silver concentrate directly from silver miners around the world, kind of under the radar. Do you know if this is true? And if so, what is their end game in your view?
Yes, it's absolutely true. This has been going on for a while now. They're scouring South and Central America. I think it's mostly South America, although I could be wrong about Central America. Mostly South America is scrounging up all the doré and all the concentrate they can for their smelters back in China. So this is absolutely true, and I don't know how much of it's going on right now. China is the #2 silver producer in the world. They import a lot of silver, they export a lot of silver, and the fact that they're out there scrounging this stuff up, it just means that. Well, I was told by one mining executive that the reason they're doing this is they're trying to starve the U.S. smelters out of product, so they don't have as much product for themselves. And there could be an element of truth in that, but the fact of the matter is, yes, China's been scouring South and Central America not only for silver doré and silver concentrate, but for a lot of other things too, including gold.
Let's talk about the silver mining sector. It's looking quite good year to date, both the SIL and SILJ ETFs up around 60%, obviously greatly outperforming silver itself and completely outperforming the broad market. What are your thoughts here on the price action in the silver miners? Do you think we're on the cusp of a bull market for silver mining stocks? And if so, do you think now's a good time to get in? Obviously, we don't give investment advice here, but so some are saying it could be overbought at these levels. How do you see it?
I'll tell you what, in the last 2 months, I think it's been the last couple of months, we've seen, up until then, the shares were just stinking up the place. I mean, they weren't outperforming the metal at all. I mean, it was just terrible. Normally, when we're in a bull market, the shares or the shares are selling for like at least 3 times, 2 or 3 times what they the actual silver prices gain is. And we haven't been, it's been years and decades since we've seen that. And all of a sudden, in the last couple of months, and I've reported in my column, I said, who's buying all these shares? All of a sudden, we'll have a big up day, and the silver hasn't done much. And this has been going on for a while now. And as you correctly pointed out, the silver equities are up 60% this year, and silver is up 29%. So we're at 2 times on that, and in gold, it's up. The shares are. I have the numbers right in front of me on a Nick Laird's chart. Huey, as of yesterday, was up 68% year to date, and gold itself was up 27. So that's more than 2 times right there, and it's 2 times, a bit more than 2 times in silver. So somebody is coming in and quietly buying up all the shares they can, and this isn't Joe Sixpack buying these shares. The retail investment sector is absolutely deader than a doornail, whether it be physical or for the shares. The people, buying these shares are the people with deep, deep pockets. They know exactly what's coming. And if you're looking for a sign that silver prices are going to go higher, all you have to do is look at the massive buying in the silver stocks. In the last couple of months, it's been going on quietly under the surface, just like the short covering in SLV and in the COMEX futures market in silver and gold has been going on quietly for the last 2 months. And unless you know where to look, you'd never see it. So this is just another brick in the wall, straw in the wind that something is afoot.
Yeah, and speaking of big money entering into the silver space, earlier this year, billionaire David Bateman bought a massive amount of silver. I don't have the numbers in front of me, but it was an extremely large amount. This just came to mind as you were mentioning that it wasn't Joe and Jane Sixpack buying the silver mining stocks. And he stood for delivery, and he's been posting about it on X ever since. He's a big believer in that silver, triple-digit silver price, due to all of the factors that you've outlined in our conversation so far. Do you hear any word of large, either individual players or institutions actually purchasing physical silver in large quantities and standing for delivery? And do you think that might be a trend we see develop moving forward?
Well, we've had big deliveries this year in the COMEX futures market in both silver and gold, and because it's all done through the bullion banks, you don't know who the individual players are that are doing the stopping on this. In other words, standing for delivery on their long positions. We just have no idea who they are as individual investors. But I can tell you right now that this Mr. Bateman fellow, and I saw the X post about that you're referring to, and he's just one of the people that's gets up there and shouts out, it's the top of the hill and shouts at the top of his lungs, look what I just did, But the fact of the matter is that the big money, the people that do it under the quietly, they'll call their broker to make a decision, get their heads together with the company or whatever and say, look, this is what's going to happen. So I think we should quietly do this. So, for every person that's shouting it from the rooftops, buying big silver, and bless the man, love him to pieces, okay, there are countless more that are doing it quietly under the hood. And we're seeing that, like I said, in the shares of GLD and SLV and all the precious minor stocks, but they're doing it quietly and under the radar where nobody knows. But like I said, if you know where to look, and as you just correctly pointed out, we've seen a huge jump in the value of the precious metal shares, and that's the quiet money accumulating for whatever's coming next.
Let's talk about gold. What do you think the main catalysts and tailwinds currently driving the gold sector are? And what do you make of gold's price action? Because it's been consolidating sideways for quite some time now, a few months at this point. What are your thoughts?
Well, we've been in this flag pattern in gold since the middle of April, so this has been going on for a long time. But I want to look at this thing from 50,000 feet up. Is the fact that nobody knows what the true free market prices of silver or gold is. We know we can look at the day-to-day action. It goes up one day and down the next, and we're oohing and awing, and people are complaining or rejoicing about what's going on. But you have to remember that for the last 50 plus years, 8 commercial traders, most of them bullion banks, have been sitting on the prices of all 4 precious metals and copper and West Texas Intermediate crude. They have been controlling their prices in the COMEX futures market. Nobody has any idea what the free market price of gold is or silver, and everybody agrees, okay, that silver should be some rather fantastic 3-digit price, and it would be if they weren't sitting on the COMEX futures market. And the same goes for gold. They've been sitting on the price forever, and platinum is even worse. If you think gold's bad, the short position in platinum is just plain ugly, and it's number 2 after silver. So, if we ever get a short covering rally like Ted Butler's bonfire of the silver shorts, and we're going to see, who knows what the free part, gold could be $10,000 or $15,000 an ounce, and silver should be, let's just pick a number of 250. I mean, that's 8 times what it is today. Look at the gold-silver ratio. It's what, 89 to 1? It comes out of the ground at 7 ounces of silver for every ounce of gold. So, even a realistic, say, 20 to 1 for silver, or 10 to 1, it would not be out of line. 10 times what? 10 times 38 is what? 380, okay? And 8 times it's 320. So, gold could be at whatever number. We're dealing with semantics here. When you've got the bullion banks, which you pointed out earlier correctly, is, they're trying to prevent people from running from the paper asset, NVIDIA and all these, GameStop and all these paper. They're trying to keep people in the paper market, in the bond market, and preventing them from running into the physical market. Anything, I don't care if it's rubber or cocoa, but, gold and silver have been money for all of all of recorded history, and the central banks have been buying the stuff up hand over fist for the last 3 years. And people are buying the shares now under the hood. And, this price management scheme has been going on for the last 50 years. And, sooner or later, it has to end. And we're seeing the signs of it now with, the shares up, big this year, and silver now at 39. I mean, I remember when buying silver way back in 2000 or 1999 for $5 an ounce. And now it's at 39, and it should be about 10 times that price. So, we don't know what the true pre-market prices are, and if the banks ever get off out of their short positions and have to cover, then we're going to find out what it is. But so gold, like silver and platinum and palladium and everything else. We're going to get a big reset in commodity prices because they've been sitting on them, trying to keep everybody in the fiat currency system for the last, well, like I said, 50 plus years. And sooner or later, that's all going to fail. And, they're talking about, like I said, everybody's talking about a great reset of one kind or another. And when the physical commodities get repriced, like silver's going to get repriced one of these days, that in and of itself will be a great reset on its own.
And we have been in this fiat currency experiment for actually not that long. If you go back to 1971, that's yesterday in the span of human history. Is it correct that prior to 1971, is this the first global fiat currency system we have been in where the whole world is essentially on a form of currency that is not backed by anything aside from trust in their governments?
Absolutely. I mean, we're in uncharted territory here. I'll be 77 years old on my next birthday. I remember perfectly well back in the 50s and the 60s, every coin except for the nickel and the penny were made out of silver. The silver dollars, the quarters, the 50-cent pieces, the dimes. We thought nothing of it back then, and I remember I was in a small town and we had a bank there. Royal Bank of Canada was the only bank we had. This is the days before credit unions came along. And anyway, I would go in the bank as a small boy with my mother. And at the end of the counter, I was always intrigued by this. There was a little cubicle there that said gold exchange. And in those days, if you looked at your paper money, whether it be a $1 bill or a 10 or a 20, I never saw a $20 bill until I was like 16 years old because there wasn't a lot of money back in those days. But every bill had the same thing on it. It said, we'll pay the bearer on demand, which means you could take your $35 or in Canadian, whatever the heck it was, in down to the bank, and they would have to pay you in gold for that. Okay, and then in '71, that all disappeared, and we've been on this fiat currency system ever since. It is on its very last legs. It's going to fail. There's no ifs, ands, buts, or maybes about it. China's been accumulating gold because they know what's coming. Everybody's accumulating gold quietly, and now the central banks have been absolutely out front about it. 1,000+ tons a year, and who knows what else they've been accumulating, and who else is accumulating. But this is all going to come crashing down because was it Thomas Jefferson said, paper is poverty. It is but the ghost of money, not money itself. Okay, so we're about to find that out in spades, and all the signs are, slowly. I mean, everybody complains about, well, it's 11 o'clock. How come it's going to be, I expect this to happen in 1 hour. Changes like this, monumental changes in politics or finances or whatever take place at glacial speeds, and there's always somebody there running interference to make sure this lasts as long as possible. And, we've been in this paper situation for the last 50 years, so what's another 6 months or a year? But the change is coming. And what's that saying, Hemingway saying, slowly at first, then suddenly? Well, the slowly part is getting faster and faster all the time. That thin edge of the wedge is getting thicker and thicker. So, we're just sitting here. I'm looking at the price of silver right now, and it was down 65 cents, and now it's up 54 cents today, and the gold's up 33.60. So what happened yesterday? Maybe there was some short covering going on. What's going on today? Who knows? But, I look at my stock portfolio and I look at it what it was at the beginning of the year, and I look at it now, what it is now, and what it's going to be in the future, and I'm very happy. So, if you're going to buy something, buy the dip like we're getting right now, and sit back and just wait, because that day is coming.
And isn't it crazy that your average person out on the street has no idea about any of this? That's the thing that gets me is that that was 1971 when we went on a global fiat currency system where we removed gold from backing. Obviously, through Bretton Woods, the US dollar was backed by gold. Most major currencies were pegged to the US dollar. And so by proxy, you had kind of a global currency system pegged to gold, although you could not go into a bank, I believe, in most places in the world and exchange your dollars for gold. Under Bretton Woods, there was a true gold standard prior to that, of course, but nobody knows this history. Nobody knows it out on the street. How are we going to shift to an honest monetary system, potentially with gold and silver involved, if your man on the street has absolutely no clue? Is it just a matter of eventually this will be forced upon us? You know, like I think who was it who had that quote? Was it Churchill who said the American empire always does the right thing after they've exhausted all other options? I would extend that to governments in general. But are we going to reach that breaking point and be forced to reintroduce gold and silver, and that's when people will kind of have to wake up?
Okay, first of all, I want to point out that back in 1967 and 68, when they started taking the silver out of the coinage, there was a mad rush by everybody in the entire population. When I was 60, I was 15 years old, about 15 at the time, and everybody in town was taking all the silver they could find. The banks were out of silver coins. There was a coin shortage in Canada for a couple of years because everybody just stole this, took the stuff and said, because they knew what it meant. They knew that it was inflation was coming.
Yeah.
I remember when postage went from 6 cents to 7 cents, there was a riot. It cost 6 cents to mail a first class letter. That was outrageous. Okay. Of course, look what happened since. Okay, but here's the other thing too, is that the governments control what everybody learns in school. Okay, they don't teach anything about a gold standard. They don't refer to the great coinage thing of 19. They don't talk about it at all. They talk about this and they talk about that. Look over here. Don't look over here. Okay, so there's 2 or 3 generations of people that have no idea about gold and silver. And that is deliberate. They've dumbed the population down in absolutely everything. I know what I took in school when I was a kid back in the 50s, in the early 60s. And what they're teaching in school today and what I learned back then are 2 entirely different things. What has changed? They don't teach you how to balance a checkbook. They don't teach you to do anything responsible anymore. So when we have a reset, 99% of the population is going to go down with the ship, and it's too bad, but it's been deliberately set up that way. And like you said, when this thing, they've been at this price management thing for so long that they're just going to keep it up right until the very, very bitter end. The last good delivery bar goes out the door before the whole thing collapses, and we're going to see that. And a lot of countries are aware of that. The banking system is certainly aware of that, and that's why they're stocking up on much gold as they can, and somebody's buying the shares. So it's like I said, it's just a matter of time, and it's just unfortunate, but deliberate, that the vast majority of the people on the planet Earth are going to go down with the ship when this thing comes down.
I want to put the question of gold revaluation to you because there's been rumors abounding recently that the Fed might be considering revaluing their gold reserves. This was kind of reignited. They released a paper wherein they discussed some other nations who had revalued either, I think, part or all of their gold reserves. I don't know the exact specifics, but they released a paper examining that and the effects of it. So that's led to a lot of speculation that it's a move that the Fed and the U.S. government could be considering. Is this a realistic proposition in your view? Does it even make sense? What could its implications be? Is it more noise than signal? What are your thoughts?
It's wild-ass speculation right now. I can see why they would want to do it. It's all part of this thing, the Great Reset. If they decided to revalue gold, like I said, nobody knows what the true price of these metals are anyway. If they left them run freely and the banks weren't allowed to suppress their prices or trade in these precious metals, who knows what they'd be priced at today? It could be $30,000 an ounce for gold. It could be $400 an ounce for silver. Nobody knows. Okay. So this talk of a revaluation is basically going to be a reset of all the inflation that's been suppressed in the precious metals since in the last 50 plus years. So could they do it? Sure. Will they do it? Who knows? I mean, it's just speculation. All I know is one thing is for sure. I would rather be all in the day before that happens rather than the day after. So, I've been all in the precious metals now for for 25 years. And although it's been pretty rocky at times, there's no place I'd rather be. So is a revaluation in the cards? That suggests it, and I can tell you right now that if silver's trading at north of $300 an ounce, you can bet that gold's going to be at some fantastic price that you can't possibly imagine. So it's impossible to tell. And I'm just, like I said, I'm all in, just sitting here waiting for this day like everybody else.
Well, before I let you go, final question. We talk a lot about gold and silver on this show whenever I have you on. I'm wondering if there's any other asset categories that you think could outperform up ahead. You mentioned you thought oil was suppressed as well. Is that another commodity where we could see true price discovery moving forward? Obviously, platinum, palladium, I know that you're very bullish on for those reasons. Where else are you looking outside of gold and silver for upside value these days?
I'll tell you what, I don't invest in anything else. I'm just in gold and silver and, of course, zinc and copper and all that other stuff because it's a byproduct of the silver mining process. I'm looking,
yeah.
I'm looking at uranium and say, well, that's got a future for it, okay? And crude oil, of course, at what is it, $50, $60 a barrel? That's ridiculously low priced, okay? But the thing is that when we see a reset in gold and silver, we're going to see a reset in all the prices of commodities at the same time. So, I'm looking at these things, but I've been in, I made my choice back in 1997, I believe. That I remember what my grandfather told me when I was a little boy back when I was about 10 years old in the early 50s, and I've always remembered that since. He said, never trust banks. That I've always owned.
What a great lesson.
Okay. I've always owned gold, and he showed me the gold and silver he brought back from because he fought in World War I in Belgium and France. And he brought back the gold and silver that he had with him, and he said, "This is the only thing that you have to worry about." And so, when you're 10 years old, you sort of remember that stuff, And so when we had the big run up in the Hunt brothers back in 1980, I think I was in my early 30s at the time, I made a bunch of money, and I made like $3,000 or $4,000, which was real money back then. Okay. And then I lost it all. Okay. Cause I didn't know anything about the silver market or anything. Okay. But the bug had been set and the die was cast. And in 1997, when we had the Washington court, I'd been following this, and all of a sudden the gold and silver bug bit hard. And what my grandfather told me when I was 10 years old sort of set me on the course for the rest of my life since then. And I look at what's going on out there. I know what's going on. The prices have been suppressed. This can't last forever. Paper is poverty is but the ghost of money. To Thomas Jefferson and my grandfather whispering that in my ear, I'm all in. Just sitting here waiting for this whole thing to blow up or melt down, whichever the case may be.
Well, that has got to be the best advice ever given to a grandchild. When I have children, that'll be one of the first lessons I teach them. Do not trust the banks. Well, Ed, this has been a fantastic conversation. Tell us about Ed Steer's Gold and Silver Digest.
Well, just Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold Silver. My website will pop up, and there's a tab on there that gives you a free sample column. It shows you the kind of stuff I report on, which is very fact-based. There's no speculation here. It's just the facts. And if that sort of information interests you, the costs $100 per year for about 260 issues.
Great. Well, I'll put a link in the description below so people can check it out. Thank you so much, Ed, for coming on again. Always enjoy our conversations.
Thanks for having me, Jesse.
Thank you for joining us today. Take advantage of ARC Silver Gold Osmium Specials, Silver Kangaroos 2023, 1 ounce coins $2.47 over spot, Silver Maple Leafs 2025 1 ounce coins just $2.87 over spot while supplies last. Reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. And by the way, pick up your merch, hats, hoodies, t-shirts, mugs, all backed by a 100% quality guarantee. Link is in the description below. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.